I'm your host, Hongbin Jeong. Apologies for the delay. We were experiencing some technical difficulties, but we're back now. We're here on the hot seat to debate the question: could the Trump tariffs turn out to be beneficial for Singapore or not at all? So let me introduce our guests tonight again. Joining us today is Professor Jing Rong, who is the Assistant Professor of Economics from Singapore Management University, who will be sharing with us why Trump tariffs are in no way beneficial for Singapore. And on the other hand is Dr. Jayant Menon, who is a visiting senior fellow of Regional Economic Studies program from ISEAS at the Yusof Ishak Institute, who will tell us why there is a silver lining in all of this. Welcome to the hot seat, gentlemen.
Hi, nice to
Thank
be
you for
with you.
having me.
Thank you so much for joining
Likewise.
us. All right, just to kickstart our debate here, I would like to ask both of you. I mean, many argue that there are no true winners in a trade war, but could Singapore emerge as an unexpected beneficiary in this global trade conflict? I mean, is it possible that amid the chaos, Singapore could find an economic advantage over other nations? Perhaps we could start off with Dr. Menon.
Right, okay. So I guess I've really picked the short straw here and having to argue the unarguable. Let me try anyway. I think, we would all be better off without these ridiculous tariffs. I mean,
Right.
that's very clear. These are not reciprocal tariffs. These are tariffs based on bilateral trade deficits in goods. And even then, there's various anomalies in the adjustments made. And this is why we have seen, the poorest countries in Southeast Asia being hit with the highest tariffs and so on and so forth. And the richest country, Singapore, has the lowest. So, uh, anyway, it's a worry, but I think, economists don't have very much positive things to say normally. But if you're looking at a few things that are both non-intuitive and non-trivial that economics can contribute, one of them is that almost all policy changes produces winners and losers, right? And in this case, I guess the silver lining, as you put it, might be to try and find an opportunity in a crisis. What is that opportunity for Singapore? Well, Singapore could take it as a case to try and diversify further, both the composition of its trade and who Singapore trades with. For composition, I think it could try harder at making the switch to services. It's already doing that. Banking and finance and transport services are growing. This is where the future lies. And Singapore is well placed to take advantage of the digital revolution and all that AI presents. So I think that's one opportunity. Another is to diversify country patterns, especially if you've got an unreliable trading partner like the US has turned out to be. So that's the sort of positives that I can try and wean out in this overall gloomy scenario.
Professor Go, what are your thoughts? Could Singapore turn out to be a winner?
Well, I wouldn't go as far to say that there's no benefits at all, right? I do consider there could be some near-term benefits from this, as I'm sure Dr. Menon has brought up earlier. But as an economist, right, we are trained to really think, to really understand, and realize that over the longer term, right, what's going to happen is it will really dampen consumer confidence and investors' confidence when it comes to purchasing goods and services or investing in the country directly, right? What happens then is that it will lead to a global economic slowdown. So I think we must really not forget, right, despite Singapore's prosperous history over the past few decades, that at the end of the day, we are still a small nation state with no natural resource. We are heavily reliant on trade. We export high value added goods and we import our daily necessities. So when
Right.
there's any big changes like this that's going on, the Trump's tariff that's disrupting the supply chain, um, I am more of the view that the Singapore will be significantly impacted in a more negative manner over the longer term, especially so.
Right. I mean, Singapore is heavily dependent on exports, particularly to the U.S., and any slowdown in U.S. demand or trade disruptions could harm Singapore's export driven economy. So, Dr. Menon, given the massive tariffs on key trading partners here, how can Singapore avoid the potential negative effects of reduced global demand, especially from the U.S., which will hurt its export dependent economy?
Yeah, it's hard to actually imagine what a small open economy, as Professor Goh has correctly described it. Singapore's a price taker, and it is heavily dependent on external conditions. So, what can it do? I guess, as I said, continue my line on this opportunity that's been presented for diversification. The more the more countries you trade with, the less vulnerable you are to country-specific shocks, right? Singapore is very heavily dependent on the US. There's talk about trying to increase engagement with the immediate region, right? The ASEAN region, intra-ASEAN trade is still, stubbornly low at 25%. It has been that way for decades now. There are good reasons why it's low, right? I mean, these are mostly competitive economies, but Singapore is the one that stands out a little bit. It is a high income country together with Brunei. So there are those differences there. It can provide more services to the immediate region, and also some of those high value goods that it produces, especially as part of the electrical machinery, electronics, and so on. Incomes are growing sharply in this region, and South Asia is growing very rapidly. So
Right.
that's an area to also look at, to try and diversify your markets. That's about all you can do. You can't really do much about changing what's going on otherwise as a small country. Yeah.
Well, with tariffs on Singapore goods remaining relatively low, Professor Goh, couldn't Singapore emerge as a more attractive source of imports for U.S. buyers, seeking alternatives to heavily taxed suppliers?
Well, I think 2 points, right? I think first, we have to acknowledge, like for Singapore, our key exports to US versus the key exports from China to US is fairly different, right? So for Singapore, some of our key exports are like your pharmaceuticals, your biomedical, precision engineering, semicon. Whereas for basically the other country that's getting a very high tariff rate as of now is China. The key exports that they are exporting are more like your electronics, right? Your furnitures, toys, plastics, things like that. So it's actually not there's very limited overlaps. So for the US partners, right, who has consistently been importing from China, with this heightened tariffs, they do rightfully so might look for alternative suppliers, but chances are it's not going to be from Singapore, right? It's probably looking for this imports from other countries that are already producing them, right, from other countries in the region. So I think that's the first point to note about that it's unlikely that there will be increased exports of certain materials because of demand for like exports from China. And I think we also need to be conscious of the fact that at the end of the day, I think everyone's hyper focused on the impact of the US tariffs on Singapore. But I think we also need to realize that there's an indirect channel from Singapore to China to US, right? Because for Singapore, we do have many Singapore manufacturers that manufacture components that's exported to the China. Finished goods is then exported to the US. So with these tariffs that impact these Chinese manufacturers, it will in turn reduce the demand for our own Singapore manufacturers. So on the whole, I do think that it will actually lead to even reduce demand for Singapore exports, not just to US, but also to impacted countries as well, like China.
Right. Well, in the initial round of Trump tariff announcements, just to give a recap here, amongst all the nations hit by new tariffs by Donald Trump, Singapore was hit the least with just 10%, while others like China have been hit by 125%, Vietnam with 46%, 24% for Malaysia, 32% for Indonesia, etc. Now, while there has been a kind of a reversal. I mean, it's only a pause at the moment, except for, of course, China. In 90 days, the tariffs will go into effect if no further changes are made and negotiations don't pull through. So, Professor Go, given the low tariff hit of only 10%, isn't this already a win for Singapore? I mean, after the 90 days, couldn't such hefty tariffs on countries like China, Vietnam, and other Southeast Asian nations lead to a surplus of goods, which could flood markets like Singapore with discounted products benefiting consumers in the short term?
Right. I think that's a great point, Hongbin. And I think you correctly pointed out the key word there is in the short term. Right. I do admit that in the near term, chances are we know that supply chains, factories, they don't adjust their capacities, production capacities that quickly. So chances are they probably already have a stockpile of inventory that they have produced. And if they can't sell it to the US, they have to probably let it go at a discount to neighboring countries. So in the near term, there's a potential that prices in Singapore may hold steady or maybe even dampen, right? But what we do have to realize is that over the longer term, these factories, right, if the Trump's tariffs continue to persist, these factories, they will realize that they have to adjust their production capacity, right? So they'll probably produce less. And when they produce less, chances are the per unit cost of production will likely increase because of the reduction in the economies of scale. And when that happens, when they sell it to countries like Singapore, for the same quality of product that we see today, chances are we will be likely paying for it at a higher price in the longer term than what we are paying for it today.
Well, Dr. Menon, as Professor Go has highlighted there, the bargain prices, because of massive trade diversion from foreign exporters, is just for the short term. I mean, the upside for Singapore may not last here. So wouldn't a likely growth slowdown, maybe even a recession later in the year, taking a toll on job and wage prospects, be on the horizon in the longer term? I mean, even the government is reassessing Singapore's growth forecast of 1 to 3%, adding that it will likely revise it downwards.
Yeah, that's right. I mean, I think Professor Go is right. I mean, there's concerns, legitimate concerns, but I still think it's maybe a bit too early to tell. The overall uncertainty created by these erratic changes in US trade policy has imposed a cost on everyone. And I think this will mean, firms will probably defer investment plans. You can't make these sorts of investment decisions in this environment when everything and anything can change almost on a day-to-day basis. But whether it leads to something a lot worse, which we fear, which is a global recession, still a bit unclear. I think the pause that we've seen is a reminder that even Trump might be capable of backing down
Right.
when confronted with the dire situation, right? And this situation was averting a bond market crisis that he was faced with. I mean, I don't think he realized it, but he was told about it. And I think the pause inadvertently now provides the opportunity for negotiating on these tariffs. And I don't think this will be the first pause. I think this is the first of a rolling set of pauses because you can't negotiate with so many countries in 90 days or even 180 days. It'll take a year or more, actually. So I think we'll see rolling pauses, but that's not a bad thing as long as the tariffs remain paused, right? And let me just add this. I think there's a small but real possibility that negotiations could lead to both the US and trading partners reducing tariffs and non-tariff barriers. And once they reduce tariffs on each other, it certainly makes sense to offer the same reductions to all trading partners to avoid these transaction and implementation costs, right? You don't want to have too many tariff lines with different rates. You just want to multilateralize them. And that's what ASEAN has been doing anyway for quite some time. So, so there is that small opportunity that could even be a net positive. I wouldn't hold my breath, but let's hope for the best.
Right, right. Well, Professor Go, while the U.S. is a significant trading partner, Singapore has been actively expanding trade agreements with China, the European Union, and ASEAN countries. So couldn't these, global trade tensions with the U.S. lead to greater diversification in Singapore's trading relationships, reducing dependency on the U.S. and leading Singapore to find new trading partners and opportunities that they may not have considered before, especially as it seems that the U.S. is currently not open to negotiations, as echoed by Prime Minister Lawrence Wong.
Well, I do think that would actually be if given the fact that Singapore doesn't already have an extensive network of free trade agreements. Right? And one thing that to only realize that Singapore over the past few decades, uh, as of today, as I checked, 15 bilateral free trade agreements and 12 regional free trade agreements. And it basically makes Singapore as one of the most, it's the country with one of the most extensive free trade agreements globally. So sure, we can invest more time and resource into diversifying our trade route, exploring new partners. However, given the sufficiently extensive network that we currently have, I feel that the potential marginal benefits to explore is unlikely to compensate for the marginal losses that comes around, that arises because of Trump's tariffs.
Well, earlier this week, Prime Minister Lawrence Wong also announced a new national task force to help the country navigate the immediate uncertainties following Trump tariffs announcement. Now, the last time the government formed task forces was in response to dealing with critical national emergencies from SARS to COVID. So, Dr. Menon, doesn't the formation of a new task force in response to Trump's tariff announcement signal that Singapore is facing a dire economic threat that could threaten its stability?
I think the formation of this new task force is recognition of the highly challenging times that we live in, right? More so than any sign of panic on the part of the government. I think it's a welcome sign that they are preparing to deal with this mounting challenge. In a volatile, uncertain environment like we find ourselves in today, having effective institutions that allow rapid responses is critical, right? And I think, pulling together this task force is a sign of that, right? Singapore, more than most other countries, has these strong institutions that are capable of responding effectively and rapidly. We saw that with COVID, even SARS, and other crises in the past. And I don't think it'll be any different this time. This is a key advantage, and I think this quick response from the Prime Minister is an illustration of that. Now, the US was a key proponent, right? A key player in setting up the rules-based order, which was developed in the wake of the Second World War with the Bretton Woods Agreement. And now it looks like the main player in tearing it all down. So these are very difficult times. And so, task force is the least one should do in preparing for what might be around the corner with this administration so keen on rewriting the rule book on almost everything.
Right, right. And I mean, we've had some great insights from both of you here, but just to end off very quickly, what are Singapore's options now in response to US President Donald Trump's 10% baseline tariffs? Professor Go, would you like to start off?
Well, that's a tough one, right? If I had a great solution, I'll probably join the task force myself. But yeah, jokes aside, I do feel that I do want to commend what the Singapore government has done thus far by not implementing any retaliatory tariffs. I think that's one great thing that they have done because as economists, that any retaliation will only end up bringing around harm for both parties. In terms of moving ahead, there's some theories and generally sound good on paper, like trade diversification, regional collaboration, investing in tech, and all that stuff. But I try to be a bit more realistic in some of the ideas that I provide. So some points that I would suggest. I think first is neutrality. I think neutrality has always been one of this political asset. That's what makes Singapore so attractive to people. So I think that we should try to maintain that. We should not try to take sides or appear to be taking sides. I think that's concurrently that should be implemented with that is really diplomatic conversations. And it's not just through the formal channels, but some back channel negotiations, right? Really trying to get the key decision makers from the current White House administration to really have a real conversation to let them know that any potential tariffs will only lead to greater harm, and try to get them to understand how we can come up with a win-win situation for both US and Singapore.
Right.
Second,
And
I think is
sorry, Professor Go, we're running a little bit out of time here. And I also want to give some time for Dr. Menon as well. I'll give you 30 seconds, Dr. Menon. What are your thoughts?
Well, in 30 seconds, I know this is supposed to be a debate, but I have to agree with what Professor Go just said. I think Singapore shouldn't retaliate. I think tariffs harm the country, imposing them more than they do others. And I think that's, validated by Singapore's development experience, right, as being an almost zero tariff country, irrespective of having to face tariffs all around the world.
Stay ahead with Money FM 89.3, keeping you in touch with the world. Money FM 89.3.
Right. It looks like we're just out of time. Thank you both for joining me. This has been The Hot Seat. The Friday Night Live is up next, so keep it right here with us on Money FM 89.3.
News from the Straits Times.
These are your news headlines.